last week now. Let me see. So we have a sweep of liquidity here. Sweep of liquidity, and then we have displacement to the upside. So this is the basic thing we've seen here too. We have a low here. This low point here is just similar to like a low point here. The market obviously is coming from certain points, which is this high point, coming down to form a low, and then it's kind of pushed up using this bullish candle here. But then it pushed up, but then the market came down again, sold massively, swept liquidity, and then created this very long wick. So the market created this long wick here, and then a displacement occurred. You can see a displacement. The market went as high as breaking this close. The candle closed above this low. The same thing happened here. So we have a sweep of liquidity. The market goes up, comes down, sweep liquidity, and then there's a displacement, which is what happened here. Now, if you remember when we were talking about liquidity, we said what do we expect to see when we see a setup like this? We expect to see the market come back to create liquidity. Then probably something like this, the market fails to break that last high. Then we have a sweep again. That's liquidity gets swept off, and the market comes down to form to a POI around here. So this is it, and then we have a displacement. Finally, this is the main structure. So this is where we take our trade from. Our POI here. We're looking for opportunities to either buy or sell from. Okay, for this particular one now, we'll be looking for buy opportunities from that POI around this zone here. So, but what you have seen is that the market has swept liquidity here, failed to create a new high, and then there's a displacement. So the same thing we've seen here now. If we are comparing it to what we are seeing here, we have a sweep of liquidity here, we have a displacement. So what are we expected to see now? What do we want to see? This is where your patience as a trader comes in. You expect to see from this sweep of liquidity here, we should see what do you call it? The market trying to form liquidity at this point, then maybe a failed swing high, something like this. Then the market comes back down to this period, sweeps this liquidity off here, comes back to a POI around here, and then we see the market continues for a buy. But mind you, this is a daily time frame. So what we've just seen basically on daily time frame, for me, if I'm trading daily time frame, but this is how the setup works. But if I'm trading, if I'm analyzing on daily time frame, what I just want to see is maybe something like this: sweep of liquidity, displacement, and then I go to a lower time frame, maybe 4 hours or 1 hour, try to look out for this same thing again. So where I'll be looking out for this liquidity, this second part of liquidity, and then this other one here, to be maybe on 1 hour, the what do you call it, the time frame I want to execute the trade. That is where I'll come and be looking for this second part of the structure. But the primary structure, which is this thing here, I'll look for it on a higher time frame, maybe like daily or 4 hours time frame. So let's go to, maybe let me delete this, then let's go to maybe 4 hours now. So let me go to 4 hours time frame. So on 4 hours time frame, I can see a very sweet formation here. This is very nice. First of all, we have this low point here. Can you see? The market has displaced trades. That's the market has swept liquidity off this point. Let me make this to be like this. So we have a sweep of liquidity from this low point the market created here, and then this was the last major high the market created in the trend. But we can see that it has been displaced. The market has displaced through this high. So the market has displaced through this high, and then what are we expected to see now? We want to see liquidity being created, right? like I said, the primary structure is what we have something like this: sweep of liquidity, displacement. The market comes back to form another liquidity, then it fails to create a new high. Then we expect the market to come back to our POI around here. So once the market comes back to this period, what we're expected to see from the market is a long buy. And then our POI is here. This is where we'll be looking out for our buy trades around here. So if we're taking a trade for a buy, to be from this side here, it will be from here, and then our TP will be this first high here. So basically, this is the main structure I want to see before I take my trades. So from here now, so from this particular point now, what I want to see is what I can see: a sweep of liquidity from this low point, then displacement of this last major high. There's something you should also know about. There's something you should know about this liquidity. For me, I might not want to pick. I will show you something now. Let me remove some of these things. Okay, so this is my Fibonacci retracement tool. Now, this point that we picked as liquidity here, for me, if I'm going to look at this trade, I'll prefer the market come down to somewhere below here, create this liquidity, come back to this place, fail before this whole sweep will occur. Why? Because usually before you can consider this zone to be a valid point for liquidity, price has to actually come down to this level, this zone here. If you attended our early class, I spoke about premium and discount. So I told you that price always want to come down to discount level before it buys. And then if it's for a sell, price you should be looking out for sell in premium. So for me, this liquidity, I know other people also know about premium and discount. So I know most people will not be carried away buying from this point. They will prefer to see price to come into this discount zone, which is the price below 50% moving average. So what we might expect to see is actually from this point, price might actually come down to this 50% moving average, creates a new high, and trying to attempt to create a new high before we'll see a sweep. That's this low will be swept. Then you can see price comes into this PI and then your displacement occurs. So this is the right thing I'll prefer to see before I'll take this trade personally. Let me delete this first one. Good. And then I can delete this. So for this trade, if I'm going to apply premium and discount, this is basically what I want to see. Price sells into this discount level, trying to create liquidity, because a lot of people will be like, okay, price has finally come to discount, so let's buy. They'll put buy here, and then the price is going. Then the price fails to create a new high. Some of them, they will adjust their stop loss, and then the market just dips. That's it comes down immediately, sweeps off the liquidity from this point. It sweeps off liquidity from this point here. And then people that understand liquidity very well, their buy limit is already around here. So they are waiting for price to come to this POI here, and then they take their buys like that. So basically, this is the concept of this liquidity. Any questions so far before we proceed? Let me quickly talk about other blocks. Now, you see, trading, for you to trade profitably, first of all, you must have a particular strategy you trade, you get. And it's not every opportunity you see in the market, you just jump in. If you have your strategy, you wait for your strategy to play out. If your strategy doesn't play out, you don't take any trade. Even if it takes you 1 week before your strategy play out, be patient with it. That's why they say trading is 80% of waiting. That's, you must be patient. 80% waiting, 10% buying, 10% selling. If you just want to take every opportunity, you end up losing your money. So if you have a strategy, you must, that one like is a must. You must wait for your strategy to play out. If your strategy doesn't play out, you don't take any trade. If your strategy doesn't play out, you don't take any trade. So for this market now, if this whole thing like this doesn't play out and come to this zone, I'm not going to take any trade here. If the market breaks off and continues buying, all I need to do is to start looking out for this same opportunity, this same setup again in the new market that is forming. If this market breaks off and continues buying, I just look for a new opportunity. And then again, this is 4 hours time frame. You can go to maybe like 1 hour, just like we did when we started. We actually started on daily time frame, and on daily time frame, I told you that each of those candlesticks will take 1 day to form, but I came down to 4 hours to analyze the same thing. I just looked for my sweep of liquidity from the downside, displacement on the upside, and then I'm waiting for, I call this liquidity, but I said I expect to see this market come down, form this liquidity below this 50% Fibonacci level, which is discount level, before we have a failed high, and then my POI price comes to my POI. So on 4 hours now, that means to take each of these candles 4 hours to do all these things I'm saying. If I feel I can't be waiting for 4 hours, from 4 hours I can go down to 1 hour. I'll still look out for this same formation again, this whole setup. I'll still look for it on 1 hour, and then the same thing. I'll just be patient for price to come back to my POI. That's just what I will do. So that period of you waiting for price to come to your POI, you don't do anything. All you need to do is patiently wait for price to do that, except if you want to risk your money. So your strategies, that's why having a strategy is very important. That's why trading is actually beyond chart patterns, like seeing double top, like this basic formation now. This is actually a triple top pattern. 1, 2, 3. You'll be like, okay, price has formed triple top. Let me quickly sell or something. You look, maybe you sell and then you put your stop loss slightly above here. Price might actually come back, clear liquidity from here before it comes to form under liquidity here. So you just have to have a main strategy that works with the main structure of the market. That's why I started when I started talking about these particular sessions. When we started here, I told you about market structure first of all. Anything the market will do, the market doesn't know whether it's candlestick pattern or chart pattern. The market just wants to be forming this structure, but it cannot keep forming it like that because it needs money to do that. So that's why all this issue of sweep of liquidity, break, and all those things come in. The market needs to sweep liquidity to have money to keep pushing before it can form all these higher highs, higher lows that is forming. So I don't know if that answers your question. You just have to wait, Sha. You must be patient with trading. That's just it. I said I'm going to talk about liquidity and then talk about other blocks. So let me remove all these joins and then we look at other blocks. Basically, other block is just similar to your normal supply and demand. Let me see other block. So for this other block, you can have what we call the bearish and then the bullish other block. For other block now, basically if you see a market trending, let me see if I can check 1 hour. Sorry, 1 hour. If you want to define an order block simply means uh, a point in the market where there are large transactions happening or large transactions taking place. Now, these other blocks is usually created by the main players of the market because in every market you see, they are the main players. Those are people that have the huge capital. In Forex, we say they are hedge fund managers who that manage huge money, maybe investments from big companies, banks, central banks, and different big institutions like that. They are the ones that they are the main players in this market. We retail traders, the money we contribute in this market is just tiny. So it's more like we are trying to compete with these big institutions. That's why you have to learn what they do. And then you only trade in the direction that they are going so that you will not lose your money because they have bigger money in the market. So their capital is able to move the market in certain directions. Now, a good example is this place here. Whenever you see something like this happen, just know that these market players are seriously present. The same thing happened here. Look at there was just a tiny small sell candle. The next thing we see massive candles from buyers. That's to tell us that okay. I was giving an example of this place. I said this particular place where you see these massive candles now. Just know that it is the main players in the market, that's the institutions, they're the ones that create this play. And usually the same thing happened here. Usually this kind of points where you have this kind of move, we have what we call other blocks. Now, other blocks are where major transactions take place. So like this kind of place now, for you to mark an order block here, because buyers came in, what we have here is a bullish order block. Now let me mark something out here. The last sell candle that occurs before an uptrend starts, or the last sell candle in a downtrend, gives you your bullish order block. So before you can get another block, you must have two candles. First, you must have a buy candle and a sell candle. In this case now, we have those two candles. You can see we have a sell candle here and also have the next candle to it is a buy candle. Now, since this move here is a buy move, your other block is actually the sell candle, the whole of that sell candle from the top wick to the wick at the bottom. That's the whole wick, everything is your other block. Now, what do you expect is that in future price, the market is going to come back to this other block and then go back to buy. Why? Because the big players in this market, they move this market from this point to this point. So in future, what we expect to see is that the market will come back to this other block, tap into it and buy. And you can see that's exactly what happened here. The market sold, it came here. First of all, we have our other block, the market bought, then it was ranging for some time. Then we have a sell that came down. Then the sellers immediately they tap into this other block. You can see what happened again. Buyers came in massively. Buyers came in massively and pushed the market to this high point again. The same thing here now that occurred. If we can pick this at this point here, we can actually have uh, another order block here. So this the last buy candle before the sell candle. Remember the order block, before you can get another block, you have to have two candles. First a buy and sell, or in this case a sell and a buy. So for this one now, I'm going to mark this whole point here as my order block. The buy candle will be my order block. Now that will be what, a bearish order block. Why? Because I'm expecting the market to sell, because the market has been buying, got to this point, and then started selling. So I'm expecting this market, once whatever happens, if this market comes back to this zone, I'm expecting it to sell. And you can see what happened after the main market pushers came. They pushed this market to this point. There was a like more of a ranging market or a choppy market, and then the market sold at that point. So I'll round up this session at this point. In our next class, we'll talk more about these other blocks, and then I'll show you how you can actually